Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Tuesday, September 8th through Friday, September 11th, 2009. Well, folks, you might have noticed that this video this week is just for Tuesday through Friday. That is because the Labor Day holiday weekend extends through Monday with the U.S. markets closed. Now, I want to go over a lot of key levels and technical analysis today in this video for the whole week of next week. The reason being is because there's a lot of keys in this market that are going to be interesting. It seems like we're at a key pivotal point in this market, either where we're going to break out to the upside in a major way or really get slammed down to the downside, and we want to know before it happens which way this could go. So we're going to start to analyze across the board and really try to figure this out. Now, first of all, let's discuss a little bit about what happened last week. I think that's unbelievably key right now to look at. Overall, the market was lower last week, even though the last couple days of the week, Thursday, Friday, the markets did rally up substantially. Friday alone, the Dow was up 97 points or 1%. The Nasdaq was up 35 and change or 1.8%, while the S&P 500 was up 13, up 1.3%. But if you go to earlier in the week, the market really was getting slammed down pretty substantially. So in fact, what we're going to do here is really go back on the charts and scan all the way back to Monday. All right, so Monday being the 31st of August, the last day of August there, what you can see is you did gap lower, and then you traded along a master level, and this master level was unbelievably important across the board, and I'm going to just show you a few odds and ends about this right now. So we had isolated 102 as being unbelievably important, as I just mentioned, and you could see it happen on Monday where the market continually tries to break lower. And when you see these tails, folks, that pattern, and they can't get below, that's telling you something. And always remember that whatever stock you're looking at, whatever market you're looking at, whether it's commodities, currencies, or investment stocks related, when you see those tails and it can't get below it in trades like this is telling you there's a master level there. Very, very important level at that point. And sure enough, you can see the market hits it all day long and then rallies into the close. The next day it opens just slightly below and initially gets a master push all the way back up. Again, that's telling you that there is a huge level there. Now the key is this. Ultimately on Tuesday we rolled over them in a major way, and once you close below that level, off to the races you went to the downside. And look at the drop we got. So again, Monday was a small down day, Tuesday was a huge down day, and again, as we scan back here, and we'll scan all the way back, you can see Tuesday continued to be down. We closed near the lows of the day. Wednesday was just slightly lower on the day, closing basically flat to slightly lower, and then Thursday we started to get that late day rally. Now Thursday, why do you think we got a rally? Well, number one, two lightest days of the year in volume basically on Thursday and Friday. You got to understand that when there's light volume out there, and we've preached this at In the Money Stocks to our premium guys for ages now, light volume dictates a positive bias in the market. Always has, always will. Why? Because it's psychological. Pure and simple, it's a psychological indicator for these markets. All right, naturally, human emotion is positive. We are always a positive. Remember, if you're not positive, you're called to have depression and you're medicated. So, regardless, there's always a shift towards the positive. So, if there's no volume in the market because of no news or no key breakdown points, you always go to the positive side. That's clear and simple the reason why. All right, and what you saw here on Thursday was actually some interesting trading. Initially, we sold off, and then you started to rally back. You hovered across this master level here at 100, and just above this 99.80 master level. There's a major level right here at 100 to 99.80, and you couldn't break down. You tried early in the day, and you got back above it. Tried late in the day, and then all of a sudden, buy programs hit late in the day on light volume Thursday, and we just started to rally. And that rally extended into Friday. Now, we had the unemployment number, which, again, you have to wonder about that unemployment number, 9.7%. Not pretty, but at the same time, only losing 216,000 jobs is minimal at best. So really, that's not a bad number if you're only talking about 216,000. But bottom line is, and there'll be a great article out that I'm writing this week, folks. Watch what the keys in this market are. I mean, would you be surprised to know that more banks are in trouble right now than when the March bottoms were hit? We have much more banks in trouble right now. There's things that are a little interesting to say the least at this point in the market. But regardless, I digress. I want to focus purely on the technicals right now and the key levels. The Friday volume was very, very light again. You can see ultimately a kind of a choppiness early in the day. Interestingly enough, the dollar happened to be going choppy sideways, and then all of a sudden the dollar tanked. And I'm going to show you this. Very, very interesting to see this dollar tank. Look at this move down on the dollar here, folks. Look at that collapse intraday, and that's the starts at the exact time that the markets rally. So a lot of people will say, well, how come people say the dollar's so key to this market? This chart is a perfect example of why. As soon as the dollar starts to crash here intraday and come down, and granted, it didn't crash, but it came down in a major way. What you saw was the market just ripped to the upside on Friday, and sure enough, take a look. Right at that time frame, 11 to 11:30 is when the dollar started to plummet, and the SPY ripped higher here at 11 to 11:30, continued sideways the rest of the day as the dollar held those lows. Again, understand this, folks. This market is driven by the dollar right now. Dollar down is positive for the markets. Dollar up is negative. Now, eventually that will switch off, but right now that is key. In addition, something to note last week that I found fascinating was the gold run. GLD ripping higher on the daily. In fact, I'm going to show you the 60-minute of the GLD here because it's so important. Look at this move on the GLD. You have to wonder what's going on there. Is it just a short squeeze back to 1,000, or are we seeing big money start to anticipate a major drop in the dollar and start to accumulate that gold? We'll know next week. I think this is going to be a major week for gold. Keep an eye on it. Do we see a pullback? Do we not see the 1,005? Really, the 1,005 level is unbelievably key for this, not just 1,000, but a close above 1,005 I think would be a true breakout if it's confirmed. But what you want to watch is, do we get that pullback? Is it kind of a fake little short squeeze rally up here, or do we continue higher next week? Ultimately, you're looking for pattern. Remember, pattern, price, and time dictate everything in this market. All right, let's go back to the SPY. I want to cover all the key levels on the 10-minute chart, and then we'll go to the 60-minute. Let's start out with the 10-minute. Starting next week on Tuesday, first day back, volume should be a little bit of a hangover, what we call a hangover. That's when volume, again, is a little lighter than normal based on the fact that a lot of people are still on vacation. All right, so again, lighter volume possibly on Tuesday. You closed right at a master level here at 102 on the SPY. You're going to watch to see if that level gets taken out and closed above intraday, but more so, where does it close on the daily? Do we close above 102? Do we close below 102 by the end of the day on Tuesday? That could dictate the next major move in the market. If we close above 102, there's a possibility we make a move back to 104 and a quarter, back to the 52-week highs of this market, or the yearly highs year to date anyways, back at 104 and a quarter. If you close below, then you want to see whether or not we can take out another master level on the downside. If you get below 102, watch for it to trade all the way back to 100 to 99.80, which is master support. Again, this level right down here, and let me draw a line in the sand here. This level between these two lines is a master major level in this market. The market could not break it as of last Wednesday and last Thursday, and we rallied off of it in a major way. In fact, off of that level, over a $2 rally on the SPY just really since late in the day on Thursday and continuing through Friday where we closed at the highs of the day. So again, you know your lines in the sand, right? Everyone should be aware of this for next week, how you're going to set yourself up. You're going to watch. Are we going to take out 102 to the upside? That's key. And remember, that's on a closing basis you want to see. All right, if that doesn't happen, if we close back down a little bit on Tuesday, are we going to trade all the way back down to 100, at which point you're going to have major support. So major resistance, major support. Watch those key levels, folks, all right? Now let's go to the 60-minute. The intraday levels in there are key. You guys can follow them on your own, dissect them if you want. They're there for you guys to look at. Those will be intraday levels of support and resistance starting on Tuesday and through the rest of the week if we trade in this range. But again, they're nothing like the master levels that I've just isolated down here at 100 to 99.8 or back up to 102. So keep that in close proximity. Understand these levels are master based on the daily charts, not only the intraday charts. All right. Next up, you can see here that in a technical sense, you still could be forming an in-spirit of bearish pattern. So this is why it's so key to know whether or not this 102 gets closed above or closed below. Now, the big thing that happened based on the rally is that on the 60-minute, on the intraday chart, 10-minute, you closed back above all the key moving averages. Granted, you closed on the master level of 102, so that's still resistance. But look at this, 50 to 200 and the 20 moving average, the market is above there. In addition, you have a little bit of a consolidation pattern. Many of you guys may know this as a little bit of a cup and possibility of a handle, which is just a little bit of a reversal pattern with a bullish in spirit of flag pattern. So watch that. Now that's telling us one thing, all right? So we're seeing that. That's telling us it's good consolidation. The other thing that you have to look at also is on the bigger picture, you have a big down move here and then a sideways to up move. This is a bigger bearish pattern. So you have a micro bull, which could tell us maybe a little upside early on Tuesday, but the bigger picture is a bearish pattern. Kind of a weird situation here, what we have to look for. All right, so there's a couple different things you need to be aware of. Number one, again, just to reiterate, you have this little bit of a cup and handle, which is really just an in spirit of bull flag on the 60-minute that could be telling us we're going to have a near pop. You may have a pop to 103, but remember, it's on a closing basis. Where do we close? But 103 would be a very, very good resistance if this bear bullish flag pattern plays out. 103-ish would be your spot to look for. Having said that, the bigger picture over the longer term of next week actually is a little bit of a bearish pattern development here, as long as you don't really go up and take out this high. As soon as you go up and take out this high at 104, that's negated, and you actually look for resistance at 105 on the upside. So keep a close eye on that, folks. Very, very important to watch. There's some crazy stuff going on here, and I can't stress enough, if you're going to be a hands-on investor, hands-on trader, hands-on swing trader, whatever you may be out there watching these videos, you got to come join the Research Center. It's that important to understand what this market is shaping up. You need to know these master levels. They are going to be unbelievably key. In addition, if you have time intraday, whether you have an hour, 2 hours, 4 hours, 6 hours, you want to be in that chat room, because we're giving live play-by-play as this market progresses, minute by minute of the market trading hours, and we will tell you every little nuance that changes throughout the day, and there will be changes as we go. Do not think there won't be. So in any case, folks, come join the Research Center, come join the chat room, come join us at inthemoneystocks.com, and we will talk to you very, very soon. Have a wonderful rest of the Labor Day weekend. We'll see you on Monday.